Boom shakalaka, what is going on everybody? Randall here from Crypto Love. In yesterday's episode, I made a video, are we here at the beginning of a bull run, talking about potential Bitcoin contrarian indicator, because it seems like a lot of people are negative on Bitcoin. Does that mean Bitcoin price is going up? Well, after I made that video, I had to talk with my friend Peter, also reminded me of my friend Rain, who I talked with earlier, about how everybody thinks that long-term Bitcoin is going to do very well. Well, if you believe the contrarian indicator in the short term, wouldn't it also be applicable in the long term? So that's what I'm going to take a look at in today's episode. If you think that's interesting, you should definitely stick around. All right, welcome back everybody. Now taking a look, this is the Bitcoin Liquid Exchange, and it basically just is a long-term view of Bitcoin. Now I've done a few things on the chart. These blue vertical lines here, those are the Bitcoin halvings. The first one where it went from 50 Bitcoin per block to 25 Bitcoin per block. The second one where it went from 25 to 12.5. And the third one coming up May of 2020, where it goes from 12.5 to 6.25 Bitcoin per block rewards. So everybody thinks that this halving is going to have a positive effect on the price of Bitcoin. And they think long-term, Bitcoin is going to do very well. Well, talking with my friend Peter and Rain got me thinking, since everybody thinks that, is it possible that the exact opposite could happen? So that's what I'm going to take a look at in this episode and exactly why. Now, for those of you who don't know the contrarian indicator, Jacob Canfield, good buddy of mine, he published his chart back in August of 2018, basically saying that if you listen to CNBC tweets regarding Bitcoin and you did the exact opposite, you had a 95% accuracy for good calls. So anytime they had a bullish tweet, a good tweet about Bitcoin, you would sell. Anytime they had a bad tweet, a FUD tweet, you would buy. And you would do 95% accuracy. You would do very, very well. So that's kind of the contrarian trading, doing the opposite of the masses, being greedy when others are fearful and fearful when others are greedy. So right now, if we take a look at Bitcoin, now in the short term, people don't really know what's going on. I talked about in the episode yesterday, this one here, I talked about how a lot of people are pretty bearish on Bitcoin. They think it's potentially going down to 6,500, 3,000, 1,000 even. So in the short term, potentially could be a good time to buy. But everybody thinks in the long term, Bitcoin is going to do well. In the long term, it's going to do really well. And there's a lot of people saying that, like the one leading the charge, McAfee, the dickening, 400 days. He bets eating his own dick on the line for $1 million Bitcoin by the end of 2020. But he's not the only one. There's a lot of other people. The Winklevoss twins, they think it'll reach $320,000. Jameson Lopp, $250,000 by 2020. Tim Draper, $250,000 by 2020. Joseph Stiglitz, $100. Okay, so that one's not high. But the rest of them, pretty high prices. And that's just the common narrative. Everybody thinks, yeah, I'm going to invest in Bitcoin because in the long term it's going to be worthwhile. I think the same thing. So there's one thing that happened to Bitcoin recently that could affect the halving price. Because if we take a look at the past two halvings, price goes up, all-time high. Now, it doesn't reach the all-time highs before the halving, but within about 6 months, it passes the all-time highs to reach new all-time highs. Same thing happened here, okay? All-time high, price didn't reach the all-time highs by the halving, but about 6 months after, passed the all-time high to reach new all-time highs. Now, we have an all-time high back in December 2017, and price still hasn't passed it, but we're getting close to the halving. Do we think 6 months after? Well, there's one event that happened right here, December 2017, that basically changed Bitcoin from before that event to after that event. That event is the trading of Bitcoin futures, derivatives. Before then, there were two things. One was that people actually had to hold Bitcoin. They couldn't hold paper Bitcoin, okay? So all of a sudden now Bitcoin's traded on paper. You don't actually have to hold physical Bitcoin. Number two, people can bet against Bitcoin. Both of those things happened at this time. So what does that actually mean? Well, if we take a look at all the world's money, okay, we have each block here is worth $100 billion. So if we take a look at crypto, really not that big. If you take a look at the biggest companies, they're bigger than crypto. The richest people, bigger than crypto. California's GDP, Fed balance sheet. Look at this. All the world's currency, bigger than crypto. Gold, way bigger than crypto. Stock markets, way bigger than crypto. global money supply, huge. Global debt, even bigger, but global real estate's bigger than that. And you know what's even bigger than that? Derivatives. Created money, betting on other money. And that's what's happening. So Bitcoin used to just have 21 million. Now there's a whole bunch of derivatives created off of Bitcoin, which means that is the supply actually limited? So I went and I took a look at a couple other examples because people call Bitcoin digital gold. So we take a look at gold here. This is the gold chart. And in 1972 was when gold derivatives were introduced. So if we take a look at 1972 here on the chart, which is right here, as we can see, really didn't impact price. Okay, there was a little bit of a drop in price, but still the price of gold has continued to increase since derivatives were introduced. So just because that scarcity doesn't really affect the price that much. As a matter of fact, gold was $67 then. Now it is around $1,500, so it's gone up quite a bit. Same thing with silver. Let's take a look at that. Now, silver derivatives were introduced in 2006. So if we take a look, we have right here, there we go, 2006. Okay, price of silver just a little bit higher than when the derivatives were introduced in 2006. So it was $11 then, it's $18 now. Now, people think that the price of silver is being artificially held down, but those are two things where the price where derivatives haven't particularly impacted it. Now, one other thing that I noted was these gray bars here are when there were, what are they called? Recessions, okay? Each gray bar is a recession. And if you take a look, the price of gold builds up to a recession and then it drops, okay? Drops in a recession, okay? Builds up to a recession and then drops. Same thing with silver, okay? Price builds up to a recession and then drops. Drops in a recession. Builds up to a recession and drops. So it makes me curious. I mean, I know I know Bitcoin is a non-correlated asset, but if we have a recession coming up, is Bitcoin a good place to have your money? And that I don't have an answer for you. You can leave a comment down below. Let me know. So, anyways, back to the question of what's going to happen with gold. With Bitcoin? Is the price actually going to drop after the halving? Because it makes me think, was Bitcoin and cryptocurrencies just another dot-com bubble? That's what it felt like in 2017 for sure. I mean, I remember the dot-com bubble from 2000. That was crazy. People made a lot of money. People lost a lot of money. It felt a lot like that in 2017. But I would say there is a difference between the dot-com bubble and Bitcoin. Okay, so this is just me saying these things. This is my thoughts on it. I mean, this is, like I said before, I think Bitcoin's going to do well in the long term. Everybody thinks that. Maybe it's reason to think against that. But here's what Bitcoin offers. I mean, the dot-com bubble was a bunch of tech stocks. So this was investing in a bunch of websites and ideas that did nothing. Bitcoin actually does something. It's a peer-to-peer currency. Not only that, it's an open protocol for creating that. So Bitcoin is going to do for money what the internet did for communication. So if in the dot-com bubble you were able to invest in the internet, you probably would have done pretty good. That's probably like investing in Bitcoin. Those are my thoughts, okay? Also, Bitcoin's the ultimate bug out money. Put your money on a wallet. Monarch wallet works really well. Remember 12 seed keys, seed words, and you can take your money anywhere in the world without someone taking it from you. So those things, I think Bitcoin is really awesome. This episode, this is just kind of to get you thinking. I'd love to know what you guys think. Do you think that the price of Bitcoin will crash? Do you think that the introduction of derivatives was the end of it? I personally don't think so. I think Bitcoin has 4-year cycles. And, really everybody's looking since December 2017, which isn't even 2 years. Okay, everybody's looking at this 2-year cycle. You got to remember, it's a 4-year cycle. But everybody thinks Bitcoin's going up in long term. And if we look at contrarian indicators, they're pretty accurate for betting against. So let me know what you think down in the comments. Thanks for watching the episode. I will catch you guys later. Have a great day. All right, peace.